My name is Midasif Jima, taking you through profitable trading made easy. And so this is going to cover irrespective of any instrument, call it Forex, synthetics, and future trading. But there are a few things, of course, for to be part of our system. So I use support, resistance, and price action. So you can see price action and support resistance, or I can call it price action because support resistance is part of price action. Okay. But so in the post, just to give clarification. So I'm going to go straight. There are a whole lot of things you need to learn about this, but there are a few things. What we say is that we said market has three major behaviors, and these are contraction, expansion, and delivery, and what the ICT or SMC refer to as accumulation, manipulations, and distribution. So the following very essential for your understanding if you must be profitable in your trading adventure. So I will show a simple yet profitable and high win rate style for scalping, day trading, and swing trade in future, forex, and synthetic. So let's go. First segment is about price actions and its components. So simple to put, what is price action? All right, what is price action? Price action simply means the movement of asset price over a given period in a chart reflecting the behavior of buyers and sellers. All right, in a given market. That's what price action is all about. So have component of price on many, but I just limit to this: candlestick, chart patterns, market structure, support and resistance, trend lines and channels, liquidity and imbalance, demand and supply zones, volumes and key levels. So some of those things interwoven. Then we now go to aspect of analysis. We say analysis involves the process of evaluating market conditions and price movements to forecast futures, price directions, and make informed trading decisions. While a plan, on the other hand, it involves on the other hand, involves a structural framework that outlines how a trader will approach the market, manage risk, and execute trade. All right. It acts as a personal trading roadmap to maintain consistencies and avoid emotional decision making. So below are the components of analysis and trade plan. Top-down analysis. Top-down analysis cover a whole lot of things. Now, so you got to need, of course, I don't need to go there, start telling you that you are going to need TradingView. I use TradingView for my analysis, and you can see there's a trade I was running, so that means that's even closed the previous time, right? So you're going to need platform for analysis. This TradingView, if you have not watched my video or you are not part of our in-house platform, I think there's a need for you to join our in-house platform. So this is a forex instrument, okay? And of course, then we have cryptocurrencies and all of that. Like this is Ethereum, all right? So this is cryptocurrency. It's an instrument in crypto and that can be traded on forex. Okay, so I'm going to be just analyzing two of these guys. And then if I find a trading opportunity, I'm going to take in the process of this training. All right. So let's quickly first look at what we call top-down analysis. It's very simple. Top-down analysis to a mapping. Remember, we said analysis has to do and trading a plan has to do with mapping out and all the strategy that's involved. And having known that price action involved candlestick and all of that, and structure, support, and resistance all put together are what we're going to be considering. And if you want to know more detail about price action and all of that, of course, we run course. We have introductory course and remedial class in Plan B Express that cost just $100 for you to know basic what terms are not like. And I can recommend for you, you can read up some information and training on Baby Pips. So Baby Pips can teach you basic fundamentals so that you may not need to waste your money to Plan B. All right. So you can go to babypips.com. So it's a learn forex, all right, learn crypto and all like you can learn virtually everything on Baby Pips. Okay, it's a very fantastic educational platform for currency, financial market and all of that, or trading as it were. Okay, so let's quickly go. I'm going to do top-down analysis, and so watch me. I'm going to be very fast because I'm not going to detail here. Just watch me as I go. And you want to know how to do that. So the first thing I need to do is to do top-down analysis. As a day trader, you don't need to go to like weekly, monthly, and all of that, because you are not a position or swing trader. So let's just take on daily time frame. So I'm going to go on daily time frame, right? So let me go on daily time frame. So what I want to do is top-down analysis first on the daily time frame. So there's so much short way I could do it. So I could just go this way, for instance. I can come to the market. I look at the daily. Now the narrative is that where is the market coming from? Where is it going to? All right. So now I can just go here. This is daily time frame. For instance, I can take my line to mark out this point. right? Why am I marking all these points? So all these points I'm marking now, then I can mark out this point. So ordinarily, these 2 points I want to mark is like the roof and the floor, okay? So which is the top and the bottom, okay? There are other places that important area you want to actually mark out. I may not have energy to do that now, but I will have loved to do that, but just to do top-down analysis. Now, so I've marked all this area, right, to see the top and the bottom. So ordinarily, to do full analysis of it, I'm supposed to structure the top-down analysis. But let me just do this I want to do to you now. So let's go quickly. I've marked all these points where I mark up here and all of that down here. Another thing I will have marked coming for the day is to mark this place. Now, so all these places you see me marking, all right, definitely this is a downtrend, right? And this is daily time frame. I've just marked some key levels, which are liquidity area. So I'm going to go to 4 hours, right? So in 4 hours, ordinarily, when we came, we have marked this point and all of that, right? So in 4 hours, all right, in 4 hours, this market was doing a kind of sideways. That's what you are calling it. Why? Because when we talk about market structure has to do with a swing low and swing high. So if you read up about what to say, market structure has to do with swing up and down movement and create a trend. And so we have a downtrend and an uptrend. Okay, we have a downtrend and an uptrend. And so the basic tips I gave here was this, very simple. If you look at the basic tips I gave here, I say tips and golden rules on price action setup. Market forms, right? Market forms higher high, and higher lows. And that's called an uptrend. At least 2 each. A higher high, a higher low, a higher high, a higher low. That is an uptrend. Now, market forms lower highs and lower lows. That's what? A downtrend. At least 2 each. Okay, price approaches a key level, resistance level, potential. Right. So now, so a key level, especially on 1 hour. So daily time frame, key level. So you can see what I've just marked here as I come in were 2 places majorly, here, down here, and here. So now maybe when you come for the day, probably when you come for the day, this is liquidity area, and this is a key level area. Okay, if I extend it down here, you're going to see some touch point. So now what I expect this guy to do now is that is either get to this point and get rejected and pull back. And if it's going to pull back, the next point I'm going to look at is where is the closest area of support, which is going to form what we call demand zone in 1 hour. Okay, so I'm going to mark another point here. So let's take this very quickly. So I'm going to take this. Okay, because I'm not going to go to detail of this, because I want to go to detail of this. I will show you some things about, imbalance and all the like. Okay, so now if that's happening, we have marked this. So we expect this market to break this and retest. Then we'll be finding an entry. And if it's going to do that, this is 1 hour time frame. So I'm going to take a 4 hour time frame. I'm going to find another point here. This is another liquidity area. Okay, this is another liquidity area. So we talked about support and resistance, demand and supply, and all the like. Now, so I may want to denote different. This is daily, and all of that. So probably maybe I want to denote it with a different color entirely. So probably I want to denote daily with black line. And then, so let's go, black line. Then 4 hours, this is 4 hours key level, right? So I want to denote it with blue. Okay, so let's denote it with blue so I can understand what I'm doing per time. So probably this point. Okay, so please take note, I'm not going detail so you don't get it twisted. Okay, so let's go right, blue. Okay, so now can I trade now? The answer is no. Why will I not trade now? We're looking at what this market is going to react to. So these are top-down analysis from up to bottom. And so if I had come here, I would have been able to find today's 14th, and let's look at it. This is 4 hours. Okay, so the market open here. I will have find a trade from this point, but nevertheless, so probably I want to check another time. Okay, so now going to 1 hour. So we have seen something very, very significant. We have seen that the market have approached a key level. So what you expect in a key level to another key level, right? Okay, maybe we have to go to back to our daily so that I can still show you another major key level on daily time frame. Okay, so this is a major key level on the daily time frame. Even this point, okay, can we have like two connecting line? So let's say this will have been another key level. On a daily time frame. So we have to denote the daily time frame differently to make it black. So yeah, so let's go. So we're gonna go now. So let's go back to the 1 hour we went back to. So what I expect for this guy to do here is very simple. I want you to cross here. So now the question you ask Felix, can I trade now? No, I can't trade. Why? Why will I trade? What am I going to trade? Market has approached a key level, and so we note two things: a potential reversal or a break and retest and continuation. And so that's where I'm going to make decision. So for now, there's nothing I can trade on this guy. That's what it means. So we could go to 15 minutes. Remember, it's okay on daily time frame. So this is 15 minutes. You can see the market at approach here, and of course, start reacting. So now, what should I do ordinarily? Very simple. What am I going to do? Very simple. I'm just waiting for the market to actually give me a confirmation, which can go to 5 minutes or 1 minute. And what I'm looking for in 5 minutes or 1 minute is a changing of structure. That is, market is changing from the direction it ought to be, right? So now you can see the market has approached here. This is 1 minute time frame, for instance, right? So this is a pullback. So I expect the market to return back up to this point and then get rejected. And that means there's going to be a waiting period for me because the time you're coming in. If you were in on time, if you had come in on time, then you will have been able to find a trade perhaps here, maybe after this. But what can I do now? I can't do anything. So it's either this guy is going to pull back and continue, or it's going to pull back and get rejected, as it were. So I'm just giving you this because that's how you have to wait patiently for trade. Most time we jump into some trade, though, even though this market, this is on 5 minutes, we have what is called fair value gap here. That's an imbalance was created, which part of the thing we talk about in liquidity, right? So part of the thing we talk about in liquidity. I'm just giving you all of these so that to simplify your foundation first. So this is an imbalance FEG. So that means this guy, you expect this market to return back to this point, right? On top here, right? And then continue. And so what am I going to wait for? Okay, since it's the market itself on this maybe 1 hour or 15-minute time frame, the market itself is bullish, right? How do you know that? See where it's coming from. See the narrative here. And that's what we talk about the market structure. Here was a low, here was a high, here was another low, not up to this, here's another high. So if that is the case, so we're having region by region of the market here. This is 15-minute time frame, right? And we have this. So remember when we say about price action is to understand the uh, the market structure is one of the major aspects of your price action. So here is another low. Okay. Now this is high, so break of structure. Then this another high, and then a pullback. So someone who had come in before now, his entry will have been here, right? And the market continues. So here is another major high. Yeah. Okay. We have another one here. So, but from here, so this one is already broken. So since this one is broken, and then this one got up and retested here. So this is a low. Yeah. So this is a low. And this low had created another high. So you want a pullback. And so this pullback, we said we have 5 minutes fair value gap at this point. So because this market is an uptrend, I'm waiting for the market to have a retracement. Okay. Now, this line I've just drawn now, it's called a trend line, right? Probably I just want to see the trend of the market. So this is a trend line. Now, please take note. This is purely checking you to show you a price action and all of that. First, what you want to identify is the top-down analysis from up to down. And you have seen that this is a daily key level and this is a daily key level. So after this guy retraced down to this point, and then you want to find a confirmation for you to buy. But for me, sometimes I'm careful at the point where the market is close to a key level. But nevertheless, after retracement and it's a bullish sign, you're going to find an entry. And then once you find an entry, you probably may be targeting even this key level to take profit. And then once you take profit and the market crosses it and retest, right, break and retest it to continue to moving up, and you are finding another entry. Or perhaps while you have taken one or two trade, and then you have closed one or two, and then remaining one, you are trailing your stop loss above here. And so that can equally help you to do the needful. So this market now, what should I do? You have to wait. Okay. So you have to wait for the market to correct. And we said something, don't buy market on impulsive move. Some people will jump into this market when the candle was pumping, and then afterward, this market was going to correct, all right, itself down. After the correction is when we're going to find an entry. Does that make sense? Now, to support this, we now say there are tools you use in supporting all of those things, right? There are tools we use in supporting. We'll talk about retracement tool, all right, momentum tool, and retracement tool, momentum tool, and then trend tool. So first of its kind for trend tool is called moving average. Okay. So, and now for you to have it, you have indicator to give you that. Now for you, you can go to your indicator and type 10 in 1. Okay. You hear me right? 10 in 1 moving averages. So add it to your chart. And so you're going to have something like this. So once you have typed the 10 in 1 moving averages, the momentum indicator you probably will use either of the two, either RSI. So let's first initiate RSI or MACD. So let's go with RSI. Now, the few things you're going to do about the moving averages. This 10 in 1 you have, put in here. So we're going to go to the settings. And of course, I enable like 2 or 3. Okay. So look at input. So I put 800, 250 on, right, 21. Okay. I put what? 800, 250, and 21. So you enable this and make everything to be EMA. Okay. So you make everything to be EMA. All right. So once you have done that, you can leave 50 to be simple moving average. Okay. So once you have done that, you have to go to style and then change the color to differentiate them. And even while changing the color, you want to perhaps increase like the thickness of the candle, of the lines and all of that with different colors. And so that's what we have done here. Now, next you go to RSI. This is what I do to RSI. Very quickly look up, and what I do here is I change my RSI. I love to change to green, and of course make it somehow thicker, maybe something like this, right? And then sometimes you may not want to enable the RSI based moving average. If you want to, I normally turn it to red, and I won't change the width. Allow it to just be the way it is, to be the first one. And then I go to the upper limit, that's upper bound of it. I change it to red. I leave it at 70 though. And then I go to the line. Okay, look at this. Instead of dotted, I put it in line. And remember, I said I put a red, and then I'm going to increase the thickness. Right? This, I change it. I just increase the upper, okay? And then I can increase into the thickness of the dotted line. This, I make it to be green. No, the green say go, right? So I will put that. So look at, I make it to be right, thick, and I change it to line. Now, the next thing I need to do is very simple. I'm going to remove all this label. Okay, then oversold. Okay, there's a place, a RSI background field. I remove it. So align in a plain chain. So very good. So we're good, right? So this is RSI. Okay, here is RSI. Now there's something very unique you need to understand. First, when you are trading, you want to ascertain the trend of the market, like you have done your top-down analysis. Now, if you are scalping or you are day trading, probably you're using 15 minutes or 5 minutes. So what those trend line actually does for you, very simple. Okay, so it's very simple. Now, so look at this. So look at this. Remember, I told you that this guy is going to be correcting back, and you want the correction to give you a sign of continuation. Now, you're trading. Um, okay. So we said so anything above 50, all right, is the direction I've changed, right? And that was exactly what happened here. So, but do I just buy on 50? So after I've seen that I've crossed 50, I want to pull back into that 50, and then you'll buy. Now, the next thing you want to do, look at it, this is 5 minutes. The next thing you want to do, you want to see correction, all right? Maybe as the market move, and then the market corrects by probably two opposite candle, that is bearish candle if you are trending up. And then the next you want to see, you want to have a change of candle and a new engulf candle, all right? So somewhere here, okay, for instance, probably you may not be able to have get in here. It's very certain because the impulsive move was so high. And so you probably want to see just like what it's doing now as a correction. So now these are like 2-3 candles bearish. Now this candle now positive. I'll still wait for it to close and create a new candle. Probably better still if the new candle engulf this close, then that's going to make sense for me to find an entry. And then if you go to your RSI, what your RSI to have done is that we're still in an uptrend, and this is a pullback, and then the market is returning up, and that's one of the things that is going to confluence your decision, okay? And it's going to confluence your decision. And so for me, I want to see this candle close, new one open, and continue to the same direction. Then I'm going to be buying, okay? And where should be my stop loss? Of course, below this swing low, right? So that if you scalp, of course, you may not get up to that. You may just want to put it a short one and all of that. Okay? So this is a very simple strategy, all right, that you can use to profit from the market. So I'm going to disable that now, so because most time you don't just need it all the time to be in your screen, so that your screen will not be too dirty. Okay? All right. So let's go back to lower time frame. All right. So when is it going to change? Okay, look at in 1 minute. Okay. So remember, we wanted to actually mitigate this fair value gap. Okay, assuming I want to trade now. So what I will do is very simple. Go to my risk reward ruler, right? So maybe my stop loss below this swing low, you can see. And then you're targeting 1:2 risk reward. Somewhere there. Okay. I'm just doing this one snappily because one of the things I've explained to traders is that when you are scalping, make sure you don't trade too many instruments at a go. It can be very, very risky. Okay. So let's turn back to that 1 minute. Let's see. So assuming I want to trade this instrument, NAS. So let me go to where I can see the trading. Excuse me. Okay. So let's go to the trading platform. Yeah, so this is not a detailed training, so I'm just summarizing it. Okay, so CFDS, go to, I'm looking for NAS. I think it was NAS, I checked now. So NAS, okay. So this is NASDAQ, okay, sorry. So NASDAQ, so I'm going to enter into NASDAQ to buy NASDAQ. Okay. So I mean, this is a different platform I want to just use to experiment what we want to do. Okay. So now we said we're going to put stop loss below here. So at that point, you're calculating at what price did you enter. So let's go back to that point and okay. So if we enter here, somewhere there, whichever way, let's see here. So looking at stop loss, that's how many pips is this? Okay, so that's about 9 pips. So 1:1 ratio, 2 risk reward. Okay. So that means that's the place. So I'm going to go to my setting platform to put my stop loss and take profits and allow it to run. So now let's go to another instrument. So let's look at the Ethereum. Okay, wow. So Ethereum, the market's crazily volatile. So let's go to daily time frame. So let me do full, right? So I'm going to do full top-down structure here. And how do you do that? First, you go to your chart, change it from candle to line. And then I'm just going to draw my key levels using horizontal line. So, and then, so let's just get a floor here. Oh, good. Let's make the floor that place. Then we're going to get other sub key levels. So let me take this point. I need to have several touch points, at least not less than. So this makes sense. So that other one wouldn't make any sense. All right. So I'm going to go to, let's check this. Okay. How many touch points do we have? Okay. So you're just trying to be logical and more accurate in your structure. Good. This makes sense. And probably I have so many turning point here. Let's check this. Does that really make so much sense? Yeah, it does. This is cool. So let me just state more. Sometime on the daily time frame, you probably want to leave the rest to other things. Now, this is the body of the candle, and then part of the the body of the candle and part of the wick are connected. So we'll return back to make everything candlestick. So you can see now what has happened here. So what am I going to do ordinarily? I come to trade. Now, this guy is at a very serious support level. Yes, you're right. Now, what is doing now is contrasting. And so we're going to look at, okay, this is it. It's contrasting. So let's go to 4 hours. You can see that the guy had been contrasting. So sometime when the market decides to give all of this time, so what I do is to look at it and mark out the range, okay? So you mark out the range. And so what we want to have is that the market to, right? It's either the market to do what? To expand down. And that means aggressive expansion down below this line and return back to the zone and it pull back little. That's a preparation to jump up. So ordinarily, this market should be going up, right? But what you are looking for is that the market break this, it broke this, right? Return back, we break this, and then retested and couldn't cross this line, then you want to be shorting. So here, if you break this, if you come down and break this, you want to be longing to this point and observing the timer and all of that, okay? So then if you go to 1 hour, so you can see it's still kind of range market. Okay, so now as a range market, what should I have been doing here? Very simple. At that point, you can go to be scalping. And so how do you go about that? You're going to look at probably 5 minutes or 15 minutes or even 1 minute. You're going to be scalping. Look at the scalp. Remember, this just not a daily key level, just a zone. Okay. So this is just a zone. So now, if you look at it ordinarily, now looking at your momentum indicator and trend, so you want to enable, see your MACD. Oh, where are we? Did I enable the two? Okay, I think I did enable both MACD and RSI. Okay, nevertheless. So now, if you look at the both of them, you see the MACD cross here, and that can be giving you some scalping. See MACD cross here, see MACD cross here, right? A little bit of a kind of divergence, and see MACD cross here. Another cross happened here. Chances are there that you could be stopped out here because if you do stop loss above here, this will have pulled it out. Okay. So your RSI the same way. Then you want to look at your price action. Okay. So you can see that. So your MACD crossing. All right. But remember what we said about support and resistance strategy. You can see this market have been ranging. That can be a very boring trade. That can really affect your psychology so much because it's not giving you what you actually expected. Okay. So that's so boring. So you must have to be very fervent enough. Okay, let's go to 5 minutes. Okay. So you must be fervent enough to be able to, okay, so you can still enable your moving average. So in this case, most time, the moving average can lag behind. And so that's why you want to focus on your price action just to use the moving average to support. But the momentum indicator will help you too. So if you look at it now, when you are shorting here, I will say support and resistance. The market do an impulsive move, you mark it out. What you want is the market to return back to this point and reject. Mark it out, and eventually it's a cross. Then you're looking at your left. Ordinarily, you'll be expecting that the markets will come down here. It didn't. And then you should be fervent enough to know when the market is really changing. And then you long and targeting up here. And of course, your stop loss below the swing low, then take profit. Then to trail the stop loss, when you know that the market is actually very volatile, when it moves very well and starts giving some profit, you want to adjust the stop loss above your entry point. Okay, so the same thing must happen here. Okay, let's look at the NAS. I think it's NAS so NAS that we enter where it's still not, remember I told you need to mitigate this FEG. So what will happen? Mitigate this FEG and start bouncing. I will add to my position. And that's exactly what we'll do when it has to do with trading. Okay, I hope this one is going to just a kind of summary of finding an entry, all right, using the necessary tool to support your decision. And then, okay, wow. There's a trade that was running for over how many days now? Look at it on a higher time frame. Look at it on 4 hours. Been on this trade. You see? Oh wow. I think did I have a key level set here? So I've been on this trade that was last week Monday. Yeah. Been on this trade since last week Monday. If I'm not mistaken. I was at a loss point. Right. So look at it here. This is a key level. So look at 4-hour time frame. So what do you expect is that now? What are you expecting at this point? And that's why the best type of trading is swing trading. So, sorry. But you must be careful too when you are swinging. So now this is the point. What do you expect here? This is a key level. The market has got to key level, but it's not showing a sign of slowing down, right? But what we expect is that. So let me show you something very quickly. There's a liquidity here. So now the market can aggressively drop, right? That has aggressively dropped here is not an issue. There's a liquidity to be grabbed here. You can grab the liquidity and return back to the range. Yes. So that's why you have to be very careful. And most times, say, oh, the market have broke the key level and no. All right. It has to break it and then probably retest it before you can. So look at something like that here. Okay. And a lot of people will have long. So what you want to avoid, you don't long or short close to a key level. Okay. So it's very, very important. So you can grab this liquidity. If it does not, market break the below here, retested, and then creates continuation. That is to say, you're looking for a continuation to this point or whichever way. Okay, so that's one of the unique aspects of why you're trading. You have to be meticulous. That's why I encourage us not to trade too many instruments at a time and don't trade all the day. Design the day, the time you want to trade, especially in Forex. This London section, this New York section, this Asia section. Trade that time, make your money, especially as you're a day trader. Stop and then face other things. And that's one of the very, very critical aspects. Many of us are having issues. Okay, so guys, this is so far going to give to us in this tutorial to apply the tutorial to help yourself. Okay, so you can see the NAS 100 now. You see, I told you approaching this point. Okay. So when the market is approaching a key level, it has to slow down the momentum. And then before it gets fresh energy to overcome the support or resistance. All right, so go and build up. So on the comment section, you see all the link available for broker, for Forex, for synthetics, and exchange for crypto. So register, fund your account, and let's trade together. Bye-bye.